We stay with matters related to investment, and this time around looking at impact investing on the African continent. That's as a boom in the sector has been reported. Given the mass growth potential in Africa, there's an opportunity now to address a myriad of social issues. Chief Risk and Impact Officer at Gaia, Tersia Lister, speaks to us about this. Thank you so much for your time, Tersia. I think let's first unbunk what impact investing really means, solely that we can understand what is behind the current boom, particularly on the African continent.
Thank you for having me. So impact investment is an investment strategy with twin objectives. First, it's returns. Two, it's a measurable and tangible social impact.
Does this then mean this boom basically bumps out the notion that impact investing is particularly for a niche type of business that is seeking to address social issues with funding?
It's not specifically a niche business. If you go down into the business model have to address certain impacts as well, and in terms to make it intentional. From a strategic point of view, for the company must have impact at heart and also just delve down into the specific impact.
Having said that, it speaks to the likes of global developmental goals. How much are we seeing in terms of progress when it comes to multinationals investing on the African continent with benefits that suit them too?
So I think the United Nations SDGs did bring awareness to the entire population. So it is not just from the asset owners on top level, but also the corporates. We do see in terms of Africa that only just looking at the infrastructure and renewable infrastructure, so 70% of the world's population sit in Africa. 600 million people don't have electricity, and only 2% of private capital does flow to Africa for renewable energy. So currently there is a huge financial infrastructure gap still for Africa, and that is what makes the opportunity so big.
Does then that energy gap create far more space really for role players to come in and attack that particular issue? We know that South Africa has developed as we are, as well as the likes of Nigeria as economies on the continent. We struggle heavily with energy supply at a consistent level.
Totally agree. And I think that's why the world in terms of climate change, in terms of impact, can't be selective. They do have to look at Africa as well. Taking climate change, you can't just have funding solutions for the rest of the world and ignoring Africa. We need to address the needs in Africa as well, because it's a global problem. But also for Africa, the impact is deep. Securing funding to Africa, it's more than just addressing the electricity problem. It starts from getting investment into Africa, supporting businesses, and also introducing poverty and creating jobs. So compared to the rest of the world, just with simple investment, the impact is exceptionally deep.
Interesting, though, because what often comes up as a question when we speak of multinational investments coming to the African continent, there are usually, impediments around how then countries are dictated to. And I ask this question directing towards the net zero effect as well as the lessening of carbon emissions. In South Africa, there's a tug of war where the minister is standing quite firm to say we will not be told how to get to that point by global global companies. How do we respond to that in terms of mitigating what is needed as well as meeting those global standards without being pushed or rushed?
I think government needs to work with private investors. I think after 50 years of just going through the entire progress change, I think governments need to understand private funding is very, very, very needed. And your top nationals and your top asset owners is asking the right questions in terms of ESG, environmental, social, and government. They don't just want to see returns. They want to manage their risk as well in terms of ESG. So this is a combined package. So government, in order to keep the private investment, will need to reduce the risk as well. And climate change is a substantial sustainability risk. So it comes with package, and I think government will need to work together with private investors, not to frustrate their investment, to support the terms they come with.
As we are speaking, Tersia, a South African delegation is in the U.S. To lure investors there, and tough questions have been asked about electricity supply and whether the South African economy is conducive to be that destination that is desirable for investment. How tricky does that become in terms of African countries convincing investors that there is opportunity, especially when we speak of impact investing?
So I think the African investment case narrative is changing currently as we speak. We've got a West and an East that's got a political turmoil, and I don't think it's going away soon. But this brings back to Africa in terms of our strengths, and it strengthens the investment case for Africa. Africa is sitting with the rich soil. It's sitting with a lot of ground. It's sitting with water. It's sitting with a lot of raw materials. I think the opportunity there is to realize that Africa can't just ship out their raw materials. Africa can become an industrial hub if basic services are addressed, where you actually take your raw materials, you add value with relatively cheap labor, and you ship out finished goods to a Western, almost consumer machine that needs these products. So I think if we see the opportunity, which is not an easy task, and it's going to be a long opportunity and a long time frame, get the basics right, build the infrastructure, focus on energy, focus on renewable energy, focus on water and sanitation, build this industrial hub where Africa can actually become not just a potential investment case, but a real investment case.
It absolutely is about time. Chief Risk and Impact Officer, that is Tersia Lister, speaking to us about impact investing, seeing a boom on the African continent.